picked up from where we left it off in the last session. Books of account and financial statements is our subject matter. What does the Companies Act 2013 along with its rules say regarding the books of account and financial statements after having understood the distinction, the relationship between bookkeeping, accountancy, financial management and corporate law? What are the provisions dealing with them? What books of account to be maintained? How to be maintained? Where to be maintained? Inspection, access to them. All these are the matters on which the Companies Act makes a provision. Brushing up a little into what we saw the last time, we said the bookkeeping process begins with a transaction and ends with agreement of the trial balance. Financial statements picks up from there, from where the trial balance is tallied, and translates into the financial statements, balance sheet, P&L account, describing a company's financial position and profitability with cash flows. So the books of account represent or reflect transactions. Financial statements reflect financial position and profitability. Section 128 exclusively focuses on books of account. Sections 129 to 138 deals with the financial statements. In order to analyze or understand what are the provisions, what are the legal provisions relating to their maintenance, preparation, presentation, it is necessary to define them first. What are they? Unlike how it is done for financial statements, where you can inclusively enumerate the financial statements. Financial statements is defined to mean and include a balance sheet, a P&L account, a cash flow statement, a statement of changes in equity, and all annexures or schedules forming part thereof. And if it is a holding company, the same with respect to its inclusive position of its subsidiaries. The merged financial statements of the holding company with its subsidiary or subsidiaries. So, financial statements can be inclusively defined. It is not easy to do it with respect to books of account. What are the books of account to be maintained? Is not as easy as this. Books of account are defined as any books, records, registers which are maintained to reflect on 6-7 aspects. Every company shall maintain books of account, records and registers relating to its receipts and payments, income and expenditure, assets and liabilities, costing, details. So look at the difference now. I cannot illustrate or describe what are the books to be maintained, unlike how it is done for the financial statements. Books of account to be maintained reflecting what details. Now you decide. What are the records which will describe these aspects? A journal proper, the subsidiary books, the ledger, a trial balance. So what are the books which a company feels would best satisfy the legal requirement or mandate of reflecting these facets of business transactions? So here comes a difference in the legal provisioning. Books of account are defined as records including particulars relating to receipts and payments, incomes and expenses, assets and liabilities, costing records if the company belongs to or pertains to an industry for which costing records are to be maintained. Section 148. Whereas financial statements are enumerated. Every company shall maintain these financial statements as a mandate. Now 128 deals with aspects or parameters relating to books of account. After having defined what are they, then comes the other questions: how to be maintained, where to be maintained, inspection and access, penalty for not doing the legal requirements. So all these aspects will be covered in the subsections of section 128 after having defined what books of account are. So now coming to the provisions after we have understood the distinction between them. What are the legal constraints, restraints, parameters within which books of account shall be maintained by a company? What should it be maintained for? We have already seen. Number one, the books of account shall show a true and fair view. True and fair is basically a concept related to financial statements, auditing. The balance sheet shall show a true and fair view of the financial position. P&L account shall show a true and fair view of the profitability, and so on. Here the truth and fairness is with respect to transactions. Completely, fully disclose details of transactions. So the books of account shall show a true and fair view of all the transactions entered into by the company during the accounting year, the financial year. It shall be prepared on the double entry system. Double entry is mandatory, where every transaction can be split into two components, one debited, the other or others credited in the case of a compound entry. Double entry, accrual basis. Mercantile system. So every company shall maintain books of account in a manner that they reflect the true and fair view of the transactions. They are compiled on the double entry principles or basis, and they are compiled on the accrual system or the mercantile system. Simple. So the accounting records, the books of account shall disclose details completely relating to and only relating to that financial year. Double entry followed, mercantile system followed. I hope I don't have to go into those depths now, they are very fundamental. the mercantile system and the cash system for booking of incomes, expenses, assets and liabilities. Now the books of account shall satisfy these requirements, whatever books of account you are maintaining. So these are the subjective criteria for the receipts and payments, incomes and expenses, assets and liabilities, costing details. The books of account shall be maintained at the registered office of the company, preferably, ideally. Every company has a registered office, the details of the situation of which is provided in the situation clause of the Memorandum of Association. Books of account and the jurisdictional registrar are the significant aspects or implications of the situation clause in the Memorandum of Account. In other words, the registered office clause has an implication with respect to books of account of a company and that which decides its jurisdictional registrar. Books of account of a company shall be maintained at the registered office of the company, but if for technical reasons, administrative reasons, logistic reasons, the board of directors proposes to maintain the books of account at any other place. For example, if the books are being compiled on the soft system, electronic basis, electronic accounting, electronic bookkeeping, then the books of account would naturally be at a different place. Because first of all, it is intangible. Secondly, it might be maintained by an outsourced entity. So that's an example where it might become imperative to shift the books of account to a place other than the registered office of the company. Even otherwise, there are so many other technical reasons for which it could be done. So the books of account shall be maintained at the registered office of the company, but if the board of directors decides on any other place, let them decide it at a meeting of theirs. And intimate details of such other place to the registrar in 7 days of taking that call through a resolution passed at a board meeting. So we are trying to now answer the question where they are to be maintained. They are maintained at the registered office of the company ideally. However, if for technical reasons the board proposes to maintain books of account at a different place, they shall convene a board meeting, resolve on the same with a decent majority, and after having taken the decision and shifting the books of account, they shall intimate the registrar the details, address, etc. of such other place within 7 days of having resolved to do so. So this is about where the books of account are to be maintained, how they are to be maintained, where they are to be maintained. There is nothing prohibiting a company from preparing the books of account in the electronic mode. The electronic mode for maintaining accounts is something facilitated by technology so far, and this has revolutionized the way companies are maintaining books of account, preparing financial statements. So it can be maintained in the electronic mode provided you comply with the company's accounts of companies rules. There are various provisions including where the console, where the basic system providing information or details is to be maintained. It has to be in India. There must be a system of creating a tangible output from the electronic system. The number of points from which entry into the system can be made must be regulated. There must be a control over who enters input and who pulls out output from the system. And the main console, the server, shall be in India. All these are rules provided by the Companies Accounts of Companies Rules. So we defined the books of account, distinguished the basis of definition from the financial statements, went on to how it should be prepared, where it shall be maintained, and what about its soft form. We'll conclude with that in this session and continue in our next session.